Good morning, everyone. I'm Jane Morgan, and welcome to the Investor Webinar for Toubani Resources. Today, I am joined by the company's current CEO, Danny Callow, and our incoming CEO, Phil Russo, who'll provide a company overview and engage in a Q&A session. Please feel free to submit questions via the Q&A function at the bottom of your screen. Danny, I'll hand over to you.
Thanks, Jane. Good evening to everybody in Canada. Good morning to everybody in Australia. And I guess quite late evening for anyone that's dialing in from Europe or London. I'm very pleased to see so many of you on the call today. I know it's very close to Christmas, but I thought it was important that we really gave an opportunity to ask some questions and answers to our incoming CEO. I'm also going to give you a bit of a recap of the year, which I think has been a very exciting year, albeit a little bit challenging with some of the world events that have been happening. But the company has managed to remain very focused on its strategy, and we'll go a little bit into detail on that before we go into a Q&A session at the end. I think it would be poignant for me to be able to highlight some of the key milestones that we've achieved in 2022. We've managed the site operations very well. We've no reported incidents at all. That includes any first aid injuries or incidents for the full 12-month period, which is very satisfying. And likewise, due to good communication and some strict protocols in place, we've managed to continue to stay COVID-free throughout the whole COVID period, but certainly through the whole of 2022 as well. We've maintained our ongoing social responsibility projects. Obviously, at a company of our size right now, we focus on projects that are important for the health of the local community, and most of this is focused upon clearing drains and opening roadways, especially in the malaria season, which has just come to an end, and also to continue some good communication between the three main villages that surround our concessions. Through the middle of the year, the company focused on targeting new potential gold areas within our 300+ square kilometre concessions, and specifically on Kubata Est, which is to the east of our main Kubata concession. We followed a fairly rigid and structured methodical regional exploration program throughout the last 2-3 years, and this has now culminated in an auger drilling program. An auger program is really the last step before moving into full-scale drilling. And the auger program delineated some pretty good results on our Kubata Est project. So this is way outside of the main shear zone area, which opens up some really good possibilities for future drilling. As you may have seen in prior press releases, we have opened up a strike length on Kubata Est, certainly around 700 meters in strike and around 150 meters in width. We've had some good intersections there from almost near surface drilling. Some of the intersections included 20.69 grams per ton over 8 meters and 2.42 grams a ton over 2 meters. As I mentioned, these are all near surface. Auger drills only drilled down to around 20 meters. We know that our ore body on Kubata main shear is down to 200+ meters. So I think these anomalies are showing some really good indicators of future drilling potential. At the same time, we have been forging ahead hard to complete a dual listing on the ASX. This has taken pretty much most of the year, but we very successfully listed in November of this year, and we welcome a number of new shareholders on board. And I'm very pleased to say that with Canaccord's assistance, we managed to raise over and above what we expected to raise for the IPO, which has allowed us to really fund the next phase of our reverse circulation drilling program. This phase 1 program is targeting around 10,700 meters, and depending upon the outcome of that drilling, we will determine the phase 2 drilling program, which will ultimately build on that. As I've mentioned in the prospectus and in a previous webinar, our major focus right now is to look for extension of strike. So we have around 5 kilometers of potentially 55 kilometers of shear zones drilled. Those 5 kilometers have delineated more than 3 million total resource ounces. And now the intention is to step out drill and to see if we can extend that strike north and south of the existing Cubado main shear zone, and also into Cubado Est and the Gosso shear zone in future drill campaigns. I'd also like to introduce our new incoming CEO, Phil Russo. This has been a very extensive search for the right person to take over from me as I move into a chairman role. And perhaps it would be a good time for me to introduce Phil and also to allow him to give everybody on the call a background and where we're going with the new strategy. Thanks, Phil.
Thanks, Danny, and good morning to everyone and wherever you may be. As Danny mentioned, I'm Phil Russo, nearly 20 years experience in the resources sector, primarily in precious metals, a variety of roles from corporate development, strategic planning, project development, investor relations, across Barrick, Dacian Gold, and Perseus Mining. So as well, I've had 6 years experience at a North American investment bank, stint overseas. So a rounded skill set that I think complements the Toubani team and where Cubada's positioned today and where we want to take it going forward. Thanks, Danny.
Thanks, Phil. Jane, I think over to you for the Q&A.
Yeah, absolutely. And again, reiterating, if you do have any questions, please use the Q&A function at the bottom of the screen. We have had a few come through, so I'll jump into them now. So we've mentioned before, but at the flagship project, we've only drilled 10% of the strike to date. Can you give us a little bit more information on the exploration upside that the company is looking forward to?
Yeah, thanks, Jane. I think I've mentioned this a number of times over the years that we believe that we have fantastic upside on the property. It's rare that a company of our size, sitting with the resource that we have of over 3 million ounces, still has so much ground to go out and drill. And I think what's important here is that the last 2 to 3 years has really been spent understanding the structural geology, which enables us to put the drills in the right place. It's easy to have a great big concession. It's not so easy to go and follow that gold and make sure that every drill hole that goes in the ground turns into exploration ounces at the end of the day. And I think in our case, we have delineated a significant amount of strike length or shear zone length. And obviously, we now are in a position to be able to poke the drill into some of those. So what we are looking at, as I mentioned earlier, is strike extension. We have a lot of ounces that we can go back in and infill drill at some stage. But right now, I think the important thing is to get an understanding of whether these shear zones are mineralized all the way through. And I think if anyone's read our recent investor presentation, they'll see that these shear zones in this specific region of the Birimian Greenstone Belt follow a northeast to southwest trend. And on the northeastern side of us, we have Cora Gold, who have just come out with an updated definitive feasibility study and around a 450,000 plus reserve ounce and nearly 1 million ounces of resource. And to the southwest of us, we have Silla Gold, who are also drilling in the same shear zone structures that we're drilling in. So we're very confident that if we have a look at the region, there's a lot more gold to be found. And I think one of the reasons why we've made this decision to put the drills back in the ground is to really exploit that now and understand what the potential magnitude of this could be over the next 12 to 24 months.
Thanks for that, Danny. And just further to that then, so with the drilling campaign that's currently underway, so when can we expect results to come through?
Well, the great news is that we've started drilling. We're on our 3rd hole already. So, apart from the fact that we had a pretty prolific rainy season this year, so access to some of the drill pads was a bit challenging, we've managed to get the drills turning. We're using a drill contractor that we've used before, so they know the site well. And we hope that by the end of this week, we'll batch up our first set of assays that can go off to the lab. Clearly, Christmas sort of gets in the way here, and we'll hopefully start to see some results early to mid-Jan, which, if all goes well, we'll be able to report that to the marketplace.
Thanks, Danny. Just a couple of questions that have come through about grade. So what are the chances of actually being able to bump up the grade somewhat? I mean, we're sitting at about sort of 1 gram per tonne level. Are we looking for higher grades?
Look, I think, unfortunately, we have to deal with what Mother Nature throws at us in terms of geology, but, there is always the possibility that we will go out there and find higher grades. The nature of the structural sort of shear zone systems that we have in this area are that you can go and find higher grades in pockets, and obviously be able to mine that selectively, to be able to look at I guess a sort of a more focused mine plan to put it into the process plant. I think I have said it a number of times that the more ounces that you have, the more flexibility you have to be able to optimize the grade into the plant. And I think one of the things that we are doing now, which is to target additional resource ounces, is to be able to give us the flexibility to be able to redesign the mine plan at some stage in the future, to be able to look at potentially higher grade in. Because the one good thing about designing a 3 million tonnes per annum plant is, if your grade jumps from 1 gram to something higher, all of those ounces come out the back end pretty much at the same price. So I think, for me, what's important right now is to focus on understanding the potential size of Kubata and our exploration concessions, and at a later stage then we'll be able to go back in, rerun the mine optimization on higher ounces hopefully, and then see where we can optimize grade, certainly in the early years. And then obviously there's the upside potential of seeing some grades similar to our neighbours on the northeastern boundary, which are slightly higher than us. So there is this possibility always, and there's many examples in the junior mining world of companies that start up a process or an operation on lower grades, and as they continue to drill, they find better grades. So we're always hopeful, and we'll certainly be out there targeting areas where we believe that we have that opportunity.
Thanks, Danny. We just had a shareholder come through asking if the Toubani story could be similar to the Perseus mining story.
Well, we like to dream big here at Toubani, and so that's an interesting question. And Edikan was a low-grade deposit that was the origins of the Perseus story, and so the hallmarks are similar here at Toubani. I would say that it is rare to find predominantly oxide deposits of this scale in the world, and so that's why I'm very excited about the future. And as Danny was talking about, the potential to expand Kubata, I think we're only at the tip of the iceberg, I think, as the presentation says. So certainly as part of my due diligence of joining, that was really, really, really clear, is that there's no shortage of targets here to grow this deposit. And so we'll keep those rigs turning. And from there, I think good things will happen, especially since, the other element to the story is improving the market profile now that we're listed in Australia. And when you're trading at $5 an ounce, I think there's limited downside, but a lot of upside here. So sure, I'd like to think Perseus or West Africa, all these sort of success stories, that's certainly where we want to take Toubani.
Thanks for that, Phil. A couple of other ones coming through. So what is going to be done with the ancillary minerals, so the chemicals, waste, etc., once the mine is in operation? And there's also a second part to that question. So what are the current security issues facing the area?
Yeah, I'll answer the security one first, because I think that's one that comes up fairly frequently. Mali's a big country. Maybe I'll start by saying that. It's one of the bigger countries in West Africa. You have a very clear divide between sort of north and south, or northeast and southwest, should I say. We're very blessed in Mali that all of the gold operations are sitting really along the sort of north-southwestern boundary of the country, to the west of Bamako. And a lot of the issues that are happening in the country are effectively happening in the sort of central and northern parts of the country as you get closer to the east. And I think that the Malian government are very aware that a large proportion of their foreign or their GDP comes from revenues from mining companies, and therefore they are very keen to make sure that the mining industry is very well protected there. I always take a lot of comfort when I go to Mali in the fact that all of the majors are operating in Mali. It's the third, fourth biggest gold producer in Africa. Probably in the next year will become the third biggest if you look at its growth track. And you've got the Barracks and the Iron Golds and the B2 Golds and some of the really large scale miners there that have operated in the country very successfully for a number of years. So I think there's a government in place that is very aware that the security situation has to be handled. I believe that it is. I think as well that we have a very progressive mining code there, which encourages foreign direct investment, and that's all testament to the government, and certainly a lot more progressive than some of the other African countries that I've worked in, naming no names. And I think that's very encouraging as well. In terms of the sort of the mining cycle, we've been very, very cognizant of making sure that everything we do on the mining side, once we moved into a production environment, is very contained. We're aware that we're surrounded by multiple villages. There are multiple water courses in the area that are the primary source of water for most of those villages. And therefore, when we did the mine design, we looked very carefully at things like the tailings dam, which is always a concern. And anyone that follows some of the horrific news that has come out of South America in the last few years, we made sure that we went for downstream tailings dams, which means that you have a very solid wall containing the material. You don't build an upstream dam. We've also lined it with HDPE lining, which keeps anything in the dam that is in the dam. Nothing can come out. And we've made sure that the dam has been designed with a huge factor of safety to make sure that any 100-year or 1,000-year rain events will not cause any spillage outside of that dam. In the same vein, keeping on that environmental trend, we're looking at ways of providing solar battery power to the mine site rather than using diesel generators, which is typical in this part of the world. So I think and including in that is things like a cyanide removal plant. Cyanide is a pretty nasty chemical. Included in the design and the feasibility study was a cyanide removal plant. And we're also arsenic monitoring to make sure that the arsenic levels in the tailings dam don't pick up. So I think we've been very responsible in the initial designs. I think that by the time we get round to re-looking at this feasibility study, hopefully with a lot more ounces, we will go back and review all of those things again. But I've always maintained in all of my 30 years of working in Africa that you set a mining company up to be world-class wherever it is in the world. And I think that's what we've tried to do here, and make sure that we perform to levels way higher than even the local laws stipulate. And I think that's what we've tried to do in all the studies that we've done.
Thank you, Danny. So another one, given the majority of the ore is in oxide and the scale of the project is large, does this have OPEX advantages?
Yeah, I think it does. Again, it goes back to that flexibility of the more ounces you have, the more flexible you can be on how you lay out your mining operation. In the studies that we've done so far, the sulfides really only come in sort of halfway through the mine life, a little bit later. And that allows you to defer some of the capex that's required to bring in an additional mill and some additional tanks in the CIL process. I think the more oxides that we find, and clearly, the nice thing about the geology that we're seeing on this property is it's very straightforward. So unfortunately, you can be unlucky with geology and you can find your oxides and your sulfides all mixed up. You have to put in processes to be able to treat both at the same time. Sometimes your sulfides or your fresh rock is refractory. We don't have any of that. And I think one of the advantages that we've had, which has allowed us to still show some really good economics on a relatively low grade, is because we have pretty much oxides sitting on top of a transitional zone, sitting on top of sulfides. All of our sulfides are treated through a CIL process with recoveries in excess of 92 to 94%. And that gives us a real advantage when it comes to looking at OPEX. But clearly, if we can focus on oxides only, and that would be what we would be going out to look for in the next couple of years, then we would just push that sulfide plant further down the road, which would defer capex, and your operating cost is always lower on an oxide plant rather than a sulfide plant.
Thanks, Danny. Perhaps one you might not be able to answer in full, but so it appears that this is a big district. So there's 3 mining companies working along this trend, and million amounts has been found. How big do you think this district could be potentially?
Well, look, I mean, just across the border in Guinea, you've got a couple of super mines there that have probably produced in excess of 8 million ounces out of this belt. I think that we're still relatively early in understanding how big it could be. There's no doubt that everybody that's drilling here at the moment sees significant upside potential in their properties. And I think what's more important for us is that, you know, we're not sitting on these crazy 2,000 or 3,000 square kilometer concessions, which is nice to put in your investor presentation, but almost impossible to manage. Here we have plus minus 50 kilometers of shear zones on a property that really is only around 300 square kilometers in size. So, you know, it's easy to have these massive exploration areas, but when you want to bring this thing into production, you've got to remember that you're going to be mining from a pit, and you've got to get it to a process plant that's fairly central. I think here what we're seeing is that we have this potential to expand the resource through drilling, and that's what we're hoping for. But ultimately, all of those will be economic ounces because they're going to be very close to the position of the process plant when we move into a construction phase. So I think that the region has a lot of potential. I don't think you're going to see our neighbours to the north and our neighbours to the south stop drilling in the next couple of years, and we're certainly not going to either. So, you know, fingers crossed. Again, as I said before, we have to live with what Mother Nature has given us there, but certainly all the signs are that there is some significant gold down there, and I think that's what we're really hoping to find.
Thank you, Danny. So further to that then, so when does the company see it coming out with the next resource upgrade?
I think it's a tricky one, Jane, because, you know, it all depends upon the success of this drill campaign. It's always good to not stop drilling if you're getting good results, to do a resource update if you're not intending then to move it into an updated definitive feasibility study. I think for us, the real focus for the next 24 months should be on drilling. I'd like to see the company do a significant amount of drilling on the back of obviously success with the drill bit, and really make sure that the next resource update is meaningful. So, you know, I don't want to peg a date on it, but certainly I would see through 2023 and certainly through part of 2024 or maybe through 24, a real focus on the drill bit and looking at the potential at the Kabata project.
Thank you, Danny. There's another question just on the Canadian listing and whether or not we'll be keeping that listing.
Look, I think these things are always tricky. Funnily enough, we had a management meeting earlier today, and the challenges of dealing with 2 exchanges in different time zones and making sure that things are done according to the exchange rules is always quite tricky and certainly difficult when you first start out. I think the answer to that really is dependent upon how we see the next 6 to 12 months manifesting. If we see a sort of a migration from some of the Canadian shareholders to the Australian exchange, and we see the volume picking up in the Australian exchange, then I think the answer's pretty clear. But again, I think we have to just see post-Christmas what the volume starts to look like. But right now, the intention is to support both exchanges equally and focus on growing the value in the stock.
Thank you, Danny. I'm going to give you a break for a second and pass over to Phil here. So, Phil, I mean, what should shareholders be looking forward to over the next coming months with you coming on the board next month?
Yeah, thanks. Well, we'll hit the ground running in January, that's for sure. I'm scheduled to head to site in January and then down to Indaba there in late January. So I'm looking forward to that, and I think you'll see results come out as they as they come through in the first quarter. And complementing that, we'll be on the road quite a lot, meeting with as many investors as we can, because as you mentioned before, I think the attributes of the Toubani story will resonate. The story is newly listed and it's got a clean structure now, so there's a lot of good things to talk about. So I think combined with that, potentially some additions to the team just to round it out, there'll be lots happening, I think, in the first quarter and through the year.
Wonderful, Danny. I'm not sure if you have anything more. Do you want to add to that, or?
No, I think Phil takes the reins on the 9th of January. It's not much of a break for him from his prior role, but I think there's a couple of conferences coming up then which are important for us to be sitting at, and also to get Phil out to site while the drills are turning and to meet the team out there, which has been very good for us over the last 2 or 3 years. I'm very excited with the partnership that we have now. I think Phil and I have some very complementary skills from a technical and a marketing perspective. So certainly in the next few months, I'll be sitting as executive chairman, as the press release mentioned, but ultimately we'll move to a non-exec role and leave Phil to really drive the strategic direction of the company as he sees fit, in line with the sort of board expectations. So I'm excited. I really believe that the missing link that we have had, even prior to the ASX listing, where we started to see a lot of institutional investors coming on board from Australia, is the fact that you need somebody on the ground down there to really to sit and I guess continue to communicate with shareholders much more frequently. And I know that Phil is very good at that, and being based in Western Australia as well, a lot of our shareholders are based there. So I think that we're going to see a very good opportunity to re-rate over the course of 2023.
Wonderful. Well, thank you, gentlemen, for your time today. And thank you, everyone, for joining us for the Toubani Resources Investor Webinar. If we have missed any questions, please feel free to reach out by the contact details at the bottom of our ASX releases. And a recording of today's webinar will be available in the coming days as well. But thank you all for joining us.
Thanks, Jane, and thanks, everybody. Have a great Christmas, or happy holidays, I think, as the right way to say it now is. And we look forward to chatting to you early in the new year.
Thank you all.